Ladies and gentlemen, we're live. Good to see you all. Okay. Today, news that I would not have expected. Okay. SoFi just announced that they just signed up their second sports arena. Okay. A second SoFi Stadium. However, not called SoFi Stadium this time. It's SoFi Center. Okay. SoFi Center out in Florida. Okay. Now, this is actually quite exciting. It's for a specific sport. I don't know if you guys saw this announcement. SoFi put it out on their website. Let me put it out here. SoFi and Tomorrow Sports announces long-term partnership, including presenting sponsor of TGL and venue naming rights partner. Okay. TGL Golf is supposedly a new sports organization designed and developed by Tiger Woods and Rory McIlroy. Sorry, I don't follow the sport too often. In fact, not at all. I'm not a player. That being said, this is very, very interesting. And the design of the stadium actually looks completely different than other pictures that I've seen. So they keep changing it. I'm going to trust this design for the most part as of most recently. And essentially what it is, if I can show you another picture here, is a small inside stadium. They said it's about 250,000 square feet, so not tiny, okay? But it's more of an esports arena with tiny teams of golf players that play on a simulated screen. So very, very different experience. They're trying to capture online viewers, seeing a ton of investment around the world from a lot of celebrities. Sorry, I was out of focus there. And essentially, it's going to look something like this. It honestly looks like an esports arena. Like people are going to be playing video games here. And essentially they are. It's golf esports. Okay. And so they're pitching the ball into this massive screen that is essentially 20 times larger than a traditional simulator screen for golf. Okay. Then there's this massive arena. It goes further back. I didn't get any photos of it, but there were some renderings in very, very small resolutions of where they can actually putt to finish the rounds. Okay. But very, very interesting. It's trying to capture a large audience. It honestly reminds me of esports and a little bit of like F1. Very small teams. All the people have been announced. All, extremely large golf players from what I can tell. I don't play the game or watch it, but I looked up all their Twitter accounts and everything, and just across, I think it was the 9 people that they've announced so far. It was something like 15 million followers that they had just on X across the 15 people. Now, most of that is just from Rory and Tiger Woods, but still, it's unbelievable how you can kind of have this F1 style where it's like, okay, you have, a small amount of actual sports players, and then the audience that actually watches this game is unbelievably huge. It's very much a new style. It is weird. Very, very weird. It's the new style. But you know what? It's about viewership. They're trying to make this a watchable sport, something that people can sort of huddle around their TV with. But who knows? Who knows? It might even be something that they can also integrate with like VR, for example. Like maybe you can get like directly in the screen if it's all simulated. I'm sure that works well. You should be excited. Okay, here's the thing. It's not about the sport that's exciting. The naming rights for SoFi is the exciting part. One, how many views can this bring in? Golf is becoming a sport that is getting infinitely more popular as time goes on. It's directly in Florida, big state for golf, okay? We don't know what the cost is. It's not necessarily the fact that they're going to be paying the exact same amount. I think SoFi was supposed to be paying about $600 million for SoFi Stadium naming rights, okay? That can fit 100,000 plus people. This is supposed to be fitting 2,000 people in the stadium, but it's the brand recognition. So even if there is, a ton of viewers online and people are watching this through their TVs, that it is still sponsored by SoFi Technologies, okay? And then the really, really exciting part is that if you're doubling down on the stadium naming rights, that that this was an amazing investment the first time around. That's why I'm excited. Okay, I'm really excited, and the market obviously is not showing that. It is the reddest day across the board for tech and finance and everything. It's just a bloodbath. SoFi completely included in that. Um, but when there is these really, really red days, we have to look to, okay, where are they still building? Where does the innovation still come from? If you believe in the company long term. If you're trying to trade out of it and you're saying the macro is not good and everything like this, sure, I commend you for that. I'm not a good timer on that, so I still believe in the company. They're still growing. I stick with it. Is this a wise move? I mean, it depends. In the face where everyone bows down, like all these lenders are bowing down and trying to save costs and everything like this, SoFi is always taking that one step forward. I find like they seem to be just in aggressive, optimistic positions all the time. Now, if you guys saw my my video about Anthony Noto, like the history of Anthony Noto video that I put out, he was optimistic to a fault whenever working at Goldman Sachs. Optimistic during the 2001 financial crisis, when it was not optimistic to be some of these to be covering some of these companies that he was doing. So is that another position right now where he thinks everything will be fine with the certain credit markets that are happening right now, where there might be a little bit of tightening with the likes of student loans and higher interest rates for longer, and that credit card default rates are coming in super like way higher than expectations? I mean, who knows? Who knows? Hopefully, we're not burying ourselves into a deeper hole, and a potential could be, grow faster than your market is able to collapse underneath you. and that is a possibility for working out. It's not common, but it is definitely possible. I, for one, am stoked about this deal, the one that is on my screen right now still. I'm stoked about this deal because it does still show that our current stadium is definitely working. The people who are actually like the people who are showing up to SoFi Stadium, the sports people have been known to be a very good audience for us to go after, right? It's not like we don't have the data. We have a ton of data from getting from before. They used to sponsor these games. Now they're sponsoring the stadiums. It's seeming to be a much cheaper way that they're saying we can get advertising dollars out of all the eyeballs that come day in and day out. And these are supposedly going to be weekly games at this stadium or center. Sorry, SoFi Center. Should be a 2024 project. They've already broke ground about 8 months ago, so they're building this up right now. However, everything that we're seeing currently is just renderings. This is essentially what they want. I have high hopes. I believe that, esports and the likes of these things are getting more popular over time. People can watch sports from home as resolutions and coverage and all of these things are improving over time. And that's essentially what this is about. They're not worried about fitting the 2,000 people in the stadium. They're worried about covering for the millions of people that can watch at home. All of those people will know SoFi's name. That's for dang sure. Noto isn't an idiot. No chance he overpaid. Probably got a steal just like SoFi Stadium in Wyndham Capital. Potentially. You name the two companies that he got a slam deal on, but if you look at like Technisys, I do think he overpaid for Technisys. I think that the longer time is going on, it's proving that Technisys was a little bit of a hard purchase. Definitely overpaid. I'm underwater on this stock. They're not even in profit mode. No, and to be honest, I'm a little bit excited about that. I don't want to be in a boring value company. I want to be in a growth company that continues to innovate. And if they're finding new ways, and it's definitely groundbreaking. I mean, not stadium deals. Stadium deals are not new, but potentially doing more and more of these where you kind of capture the sports arena-like area where you're also backing this on the idea of financial services might be a groundbreaking idea of doing this multiple times. Maybe that's happened before. I can't think of it, however. Esports is generally a massive and growing market. I just didn't expect golf to be a part of it. Yeah, no, and the more technology that you add into a sport, the less it's going to be adopted from the people at home. This is not a sport that they're expecting people to play at home, okay? Like, this is like, honestly, I think the way to think about it is like Formula One. And that could be the way that they're thinking through this, right? But even Formula One is not digital. Like, people are going to start thinking, you know what, maybe that golf swing wouldn't actually went that way if it wasn't simulated. That like you're gonna have to make sure that this technology is absolutely perfect, and that people are like there's no qualms about it at all. Because if you cast any doubt on the idea that the simulation technology is you know, not displaying an accurate representation of what the ball would do, then the sport is lost. And that might be something that real golf players and people that are in the industry know much better than me. Asim, also 100% true. Okay. Football is one of them, but it's definitely leans to a less affluent area. Golf and finance is 1 and 1. Okay. Me being a financial advisor and not playing golf has led to a detriment to my career, because a lot of deals get done on the golf course. So it's not necessarily that a bunch of people are going to be playing this. Obviously it's not. This is Formula One-esque. But it's a matter that you are going to attract people that want to do this on their off time and then make a whole lot of money on their on time. And then hopefully know where to put that money into SoFi. So in that way, I absolutely agree. High profile. Yeah. And if this is a weekly thing, it could, yeah, I mean, honestly, the more I think about it, I'm not, what do you call it? Like, not optimistic. I very much am. Okay. I want to know how much they paid, because the last call that they had, they said that this has been like some of their best sales and marketing budget that they ever had was the SoFi Stadium. And now thinking about it right now, that's probably why he was talking about SoFi Stadium, is because he knew this announcement was coming up. And so he kind of wanted to spike it to be like, hey guys, this was a good deal. Let's stop casting doubt on how good this SoFi Stadium deal was. And now let's go do it again for SoFi Center out in Florida. Okay. Which, if that's going to be the next tech capital of the world, who knows if that's going to be the thing. I heard people are coming back to California. But if that's the case, you're going to want a spot out there. Good for them. And who other than Tiger Woods, Rory McIlroy, and all of these other names? I have a list here. But you know, some of the biggest names in golf, at least from what I could see. Very, very exciting. Like I said, 15 million followers just amongst this 12-person lineup. Sorry, 12-person lineup. Crazy. Crazy, crazy. Here, let me read what hey Tanner, banks been selling off with fear of recession and high interest rates. Do you think that this is overblown, especially with money management ones with IPO and Fed stress tests? I think that I don't think necessarily people are worried about like Fed stress tests work well. I don't think people are necessarily worried about a blow up. I just also think people are willing to sell off banks if they think that they're going to underperform, right? Underperforming doesn't necessarily mean bankruptcy. You know what I mean? That there's just probably better places to store your money for now. And that could be true. Honestly, during the SoFi Weekly, I said I'm not worried that that you know, higher interest rates for longer is going to hurt SoFi. Being a bank in that space kind of sucks. What I am hopeful for, and maybe this is a little bit of hopium or whatever, but is the idea that Anthony Noto knows how to pivot. And that and we have more tools now in our toolkit than ever before. So whether that's technology platform stuff, whether that is student loans and savings accounts with high interest rates, and potentially, you know what, there's opportunities for us to get into treasury accounts and bonds and all of these things to sort of, you know what? Money's leaving markets. How can SoFi capture those markets, right? There's all sorts of ways. If we're dealing with money and we're dealing with, you know, inflation and more investors now than ever before, and anything that has to do with that, even the payments game, SoFi can be a part of it. It's just about capturing those audiences. So I am really optimistic that even in bad times, there's opportunities for us to make new money. But if we just continue down the path of more and more personal loans, I mean, yeah, there could be losses ahead. There's obviously a possibility for that if people start leaving their keys on the counter. You can't keep interest rates high forever. Like I was reading an article the other day that Canada's interest rates, I forget what percent, it was like a third or something of this certain dated percent of mortgages were in negative amortization, which means that their payments weren't even enough to pay off the interest on their mortgage, let alone the principal. And so the interest that wasn't paid gets added onto their principal. So you're adding more time to your mortgage over time as you make payments. Just incredible. Now, there is other news today, so I did want to touch on that. Just to sum up, I am optimistic about the SoFi Center, okay? SoFi Stadium still going to be booming. You know, we pay about $30 million per year for that. We got reimbursed $12 million during COVID. And essentially, we get all the, you know, Super Bowls, massive deals, the Taylor Swifts of the world, all of these extra things where people get to see our name sponsored all over. You get to drive by it. It's a massive, massive, you know, part of the sports arenas in California. It's where YouTube theater is in the SoFi Stadium. So, you know what? That's what SoFi likes to do. Not only do they like to get stadiums, they like to get, you know, the newest and greatest things. And that's what this next stadium is also going to be. SoFi Center is going to be a tech-focused, new, you know, potential esports like, you know, tech growth hub for golf, which is a very fast-growing sport as well. It's interesting. It is interesting. This one is a steal. Well, we don't know how much they paid for it, so we're not sure it's a steal. But yeah, the caliber of people is definitely exciting. I mean, the audience is very, very exciting. You're pointing yourself to a much more affluent side of the business. Okay, let's continue on. PayPal had some cool news today. Think about how you want with it, but they just allowed eligibility for PayPal credit cards, Venmo credit cards, or even debit cards for these businesses to now be added on to Apple Wallet. Now, that negates the need for you to use the PayPal app, okay? They're kind of bowing down to the hardware overlords, but saying, hey, if you do still want to get offered, you know, 2% on purchases with PayPal cashback credit card or 3%, you know, at certain locations and these sorts of things, that you can still do this with Apple Wallet, right? You could just use our card. We can still benefit from that, but you know, a little bit of the transaction will be lost to Apple. This isn't the first time, even this year, for example, that PayPal has sort of allowed some gateway for Apple, right? Braintree announced that they'll also allow Apple Pay to be on their platform as well. So there is a little bit more integration with some of the newer, bigger players. And yeah, but also the PayPal, Venmo, credit card, debit card space is not even a huge area for PayPal overall anyway. More integration with the current players. You know what was crazy? I was reading this article. I wanted to talk to you guys about this. I wanted to hear your opinions. Okay. Toast, you know, payment processing technologies got downgraded by Dan Dolev. He used to have a buy rating, and then he gave it a neutral rating. And he said, this is crazy. I've never heard anything like this. That the GLP-1 drugs like Ozempic and these sorts of things, that help with type 2 diabetes and subsequently also help with weight loss is going to negatively impact restaurant spending, because if so many people around the world are on these weight loss drugs, that they're not going to have the appetite to go out and eat, and that this is going to negatively affect Toast's gross processing volume because of a diabetes drug. That is crazy. That is crazy. He said, quote, "The GLP-1 threat to the restaurant industry and by implication, Toast Technologies is real. In our view, companies in the medical technology space that are perceived to be exposed to these drugs have seen their share price decline by nearly 20% since July 1st on average, with a handful of stock prices declining 30 to 45%. I think it's a little bit different, but yeah, I mean, hey, if you start to get to a certain level of the overall restaurant industry is processing through you, then these more macro, sort of things that are going on, like Ozempic, it could be unbelievably massive. What a crazy world we live in, in America, that weight loss has become this crazy of a topic, and that it's gotten this out of control, that the restaurant industries have just been bumped up so much, and that a reversion back to normal, if people are starting to have weight loss and loss of appetite, that's going to just destroy payment processors in that area. Unbelievable. Ask Vitaly why he blocked me on X. I promise you I'm not going to do that. I'm not going to take my time out of my day to be like, why'd he block that one guy on X? I mean, I don't know, dude. Message him somewhere else. He probably said something that bothered him. Tanner, what's your expectations for SoFi credit card Q3? I don't have any right now. I'll need to do some digging into that. And in fact, October September's month just ended, so we might be able to see some new numbers come out for the end of this month. That'll be quite exciting. We won't see Robinhood numbers. They don't usually show off their month-over-month numbers on the last month of Q3, right? So we won't see that. But, we'll see website traffic, we'll see Google Trends, we'll see a couple different things that might give us some indications of how many people are actually using those products. And then I'll have to take a look back again to see, if I can find any articles or anything that talks about the growth, if there's any insiders that are talking about the growth, and then what the growth has been previously, either, in Q3s before or just quarter over quarter. Tanner, what's your price target for SoFi after earnings? Well, I won't know till after earnings, will I? How will I know what my new price target will be if I don't know what's going to happen? But guys, what do you think about freaking this SoFi Stadium, though? I do think this is quite cool. Like, SoFi's biggest critique, at least for me, and this is one way of going about it, it's definitely super unique, but it's all about customer acquisition costs, right? That's been the biggest thing for why people like, Block Stock or NuBank or something like this. And one of the things that has really harped on SoFi for the longest time has been customer acquisition costs. It's been high like the traditional banks, okay? Even whenever you compare it to other fintechs. So I'll give you a little bit of here's a rundown, okay? Whenever you look at the exceptional players, Block, NuBank, you're looking at acquiring customers between $5, NuBank, $10, Block, and then more the fintechs, okay? You're looking between $30 to $50 customer acquisition costs. Then you look at the big banks, and those numbers can be anywhere between $250 to $500 per person. before, back whenever SoFi was just doing student and personal loans, they were acquiring customers in the thousands of dollars because they knew that they were going to get that back over time, right? Acquire the customer for a very sticky product, and then, you know, customer lifetime value would pay off the client over time. Then with things like money accounts and invest products and Relay, really brought down the price of customer acquisition costs, and had to. Okay, so not only was it a new strategy for their personal loans, which they talked about on their original SoFi investor presentation, but then you know, also the problem was they were also bringing up their average personal loans, like how much people were taking out from SoFi personal loans was going up. And so to acquire a much more healthy client, they could spend more to try to get them. And so you can see that with, like, you know, medical student loans, for example. They say, hey, if you refer that person, we'll give you like, I think it's $800 or $1,000 or something like that for like a medical student loan, just as a referral. Let alone if that person is to default or whatever. There's so much money made in these products that you can actually really offer to buy hot leads. Now, one of the cool things with SoFi Stadium is that you don't necessarily have to do Super Bowl ads or any of these things. Like, these kind of come naturally whenever you own the stadium names to, or the naming rights to the stadium that the Super Bowl is actually played in, and all of the other things that are to actually happen at that stadium. What has happened recently with SoFi, and I could bring up some numbers if you guys like. SoFi's customer acquisition cost was going up every single quarter. In fact, I think it hit, and we're about to see in a second here, I think it was $384 per person, and that could be averaged out from a Relay customer, someone who's coming in just to see their credit score. And you know, we paid on average $380 here, wait, where is it? $384.89. Good memory, Tanner. Good memory. Okay. This is what I'm talking about. Boom. Okay. So the last couple of quarters, we've seen customer acquisition as low as 191, I think, since we've been a public company, or since we've had these numbers, then going up all the way to $298 per person. But this is down from $384 the quarter before. A massive decrease. If SoFi can continue to do that, bring down these customer acquisition costs, will be very exciting, because then it means the profit per customer, if those continue to climb, will be very exciting as well. Like, interest brought in per customer from student loans, or interest brought in from home loans or personal loans, if they continue to climb up over time. In fact, let me see. Yeah, see, this is what I was talking about. Average loans per person was continuing to climb up. Actually, just in the last quarter, that took a little bit of a dive down. So maybe that also had a positive impact on customer acquisition costs, is that we weren't necessarily going after a very high client. But maybe those are small changes. I'm not sure. And revenue per member also goes down as we lean more towards financial services products, which hopefully we're acquiring them for cheaper than loans. Obviously we are. Can SoFi keep high APYs, and will they keep it high? So the thing that management has always said is that they can keep it higher for longer because they have such a higher margin than someone like a Robinhood, for example, that they can keep those rates much higher than them. And so if there is any reversion down and Fed rates start to go down, Robinhood will be the first one off the table. They'll pull that rate. They'll start lowering. A bunch of the places will start lowering. SoFi might also. I'm not sure. No, I don't have a crystal ball, but they do have the ability to keep it higher for longer because they have the charter, so they don't have to pay, any other bank for the fees to host those deposits. And also the fact that we're a fully digital bank, all these extra things that increase our margin. So I honestly think SoFi might not provide expected numbers this quarter, but will deliver following quarter. So this is what I'll have to say about this, Sam, because this is great. SoFi is one of those companies that I always talk about, where people can get their hopes up over and over and over for companies like Snapchat and companies like Palantir, even where the opportunity is so amazing that people forget that management sometimes underperforms. Okay, numbers on Palantir's last quarter were not as exceptional as people wanted them to be. Okay, but people keep getting their hopes up, and I'm not necessarily a bear towards Palantir, but it's just the case. You said you were going to hold up a 30% compounded annual growth rate. That has sort of been reverted. Okay, they're under that right now, and by quite a margin. Now, SoFi, on the other hand, is one of the ones where people can say endless amounts of bearish news, and yet continuously they put out beats every quarter. And so it's painful whenever we don't have the numbers in front of us, and then it's a party afterwards because it's always on the surprise upwards. So one thing that I have to continuously remind myself, as even I get bearish sometimes about some of the news that comes out, is that SoFi is an amazing executor, and that it outperforms my own expectations sometimes. We saw that last quarter. Guys, go back to the last quarter whenever I did expectations for all of their quarterly numbers. So personal loans, home loans, student loans, credit cards, Relay, SoFi at Work. Most of those numbers went above and beyond what I was expecting. That has to cost for something. And so what happens every quarter that SoFi actually announces their quarter? Oh, stock up 19% that day. So the stock raises, in hours as people get the numbers, and they're always to a higher surprise than what people think. And then the bearish news starts coming back in, right? Even right after the quarter actually announces. Oh, well, you know what? Wait till the actual quarter comes out. We need to take a deeper dive into the Galileo's numbers. We need to take, a deeper look at how much, they paid for Wyndham. We need to take a deeper look at all these things because we don't have a full assessment of the company quite yet. And then we get the numbers from Wyndham Capital. The stock doesn't even come up. They paid 1/5 of what I thought they paid for it. Like 1/5. Maybe even more, depending on how much they paid. I'm just, ballparking at 60 to $70 million. Maybe it was 50 million. I'm not sure. So, yeah, it can feel bearish, but I have some optimism. Maybe I have that Anthony Noto syndrome, where when things are getting hard, I still continue to be a little bit more optimistic, or have a good spin on the news, maybe to my own detriment. But at some point, you got to give some people some execution credit, and the numbers are looking good the whole way along. We have to remember that Taylor Swift concert was during this time. All those Google Trends numbers that we've seen, the highest in any other quarter that we've ever seen. So, you know what? Like, I am quite optimistic that, new member growths could be quite high. And if those are to the likes of things like student loans, personal loans, we've sold them hopefully on a positive gain on sale margin, maybe even higher than what we paid for them, or even the book value of the loans, which, by the way, is what happened last quarter, that it'll be a good quarter once again. Can we be proud of that Wyndham Capital buy? Yes, I think so. Unless there's something I'm completely uneducated about. I think that you're taking something with great technology that couldn't quite be affordable because marketing it out to no customer base was not affordable, and that the market for mortgages was kind of drying up, was way too expensive for Wyndham to handle. To go to now offering it to a massive and very fast growing user base is something that you kind of leverage your good technology off of without having to worry about the tech expense. I think that's quite a good matchup. Checking only gets like 0.5% now. Yeah, that's not that's by design. You have to remember that SoFi offers 4.5% on their savings account, but that's not actually how much they pay out whenever you average out all their deposits. It's somewhere about 3.8%. And it's because of that beautiful balance between checking and savings. So on paper, they can say they're offering 4.5%, but obviously, realistically, if you're using them full time, you can't keep all your money in savings. By the way, SoFi Stadium won't hold many more concerts until they sort out the acoustics. Read the reviews. I mean, maybe that's true, but how long has SoFi Stadium been around? Why didn't Taylor Swift's team know about those reviews before she got in there? It's not like this is brand new and that there hasn't been concerts. So I'm sure if I go to the SoFi Stadium thing, unless something changed, let me see their lineup really quick. Where can I find this? Not plan my visit. I'm looking for a lineup. Tours? If someone could find it for me, just the lineup of artists that are going to be attending, because I'd like to see that, because I'm sure they're booked. I'd be pretty blown away if they weren't booked. Okay, so I'm just looking really quickly. I see Travis Scott is announcing, or is doing a thing there. Pink is doing something in 2 days, but I can't see like a full list. I'm only looking at like their slideshow right on the front screen. TripAdvisor made any concert review. Yes, no, that could be perfectly fine, but that doesn't mean that no concerts are happening. People are still going to be showing up. If the artists are going, the things will be fully booked out. Can you see one of the big tech, specifically Apple, trying to buy SoFi? You're probably new here. No, I would bet all my marbles that no tech company buys SoFi. And it's because we're a fully chartered licensed bank. And so I don't think any tech company wants that, sort of, what do you call it, regulation under their belt. They're trying to stay away from regulators, going, hey, you know what, there's no monopoly here. We don't have, a big grasp on people's financials or anything like this. Don't look our way. There's no way they're going to buy a bank. I bet everything on it. All these players play in the financial space. All of them, and none of them have ever tried to become a bank. And if they did try to become a bank, it was a heck load of a long time ago. I went for tacos last Tuesday. They had medium, hot, extra hot, and SoFi. I went all in on SoFi. Just kidding. That's such a... All right, man. I'll buy some SoFi after next quarter earnings. I think it might still bottom. Yeah, potentially. Remember, I don't do these calls as signs to buy or not buy a stock. I'm just saying the news for today and what I believe. So SoFi Center, quite interesting. Tanner, are you more or less bullish than when you first started investing in SoFi? If so, why? Well, I mean, definitely yes. Price is much cheaper. First time I bought SoFi was in the $14 ranges. Am I as bullish or as excited as for my returns as then whenever I was buying in the $4 ranges? No, no. Whenever I was buying in the 430s, range, these sorts of things. Actually, I don't know if I got 430s, 440, 450, something like that. I think I remember. I'll have to check. I was really excited because I wasn't worried about bankruptcy, and then that seemed to be the only thing that would keep it down at that low price. Like we were below book value for a fast-growing company. So people need to just sometimes realize that like that's not happening. All right. And I see the same thing with like a PayPal. It's like, wait, you think this company's going under? They're buying stocks at a ridiculous rate and making more money and printing more earnings per share every quarter after that. And they're not going away. So yeah, no, I'm more bullish than whenever I first started. And also I know the company a heck of a lot more. So very bullish on the idea that I know SoFi very well. That's what DD helps with your confidence in these times. Tanner, can you touch on SoFi's current return on equity and how that figure fits into your long-term thesis for the company? I don't even remember what the return on equity is. I could check it really quick. I remember listening to IP Banking Research, who's way more into those, banking margins than I am. I'm more product focused as an investor to a fault, probably. Here, let me find it really quick. I do believe that as SoFi ages as a bank, these sort of more, real profitability metrics will improve over time as they, mature as a bank. I'll have to check. Checking on Koifin, by the way, new sponsor of the channel. They really helped me out, actually. Bear with me a moment. This is gonna take too long. What is your top concern that you have with SoFi? That they increase their defaults on their loans and that we don't make profits. In all seriousness, I sold my new position today and put it into SoFi. SoFi under 725 is getting ridiculous, but 650 support is even more crazy. Yeah. I mean, personally, I wouldn't have. I'm moving to Canada to get away from Powell. Well, then you should change over your currency, my friend. This looks like US dollars. No, I haven't bought SoFi today. I don't know. I'll probably buy SoFi. I think it's probably I think the pessimism in the market right now is pretty freaking high. And so, maybe in a couple days, but I did quite a good amount of buying in the $7 ranges. I want to see if it hits 6 personally. I might be wrong, but how important are upcoming earnings given recent bloodbath? Are you meaning that, Shanus, like they're not important? Because I still think that they're important. I mean, the only way that I invest is based off the actual fundamentals of the company. So every metric that SoFi has to put out for their next earnings will be important to me. Will it be important to the market? I've never known that. Look at the financials. Nu is a better bet than SoFi. I don't think that's fair to say. Yeah, I don't necessarily think that's fair to say. NuBank is really, really exciting and a very cool company for me, but there are political risks. There's risks that the growth will slow down. If, for example, let's say Colombia growth doesn't happen, Mexico growth doesn't happen, and all of their, new member, like you can only grow so many members in Brazil before every member in Brazil, or at least, 80% plus, like how many people will even use NuBank? And then growth just hits an absolute, ceiling and stops. So there are real risks. And then whenever you look at market cap, you also have to factor that in. Now, I'm still super bullish, but I don't think that one is better than another. Well, I mean, as a company, NuBank is definitely better. As an investment, I'm betting that SoFi does better long term. On a percent change basis, not a market cap basis. Are you buying SoFi on this flush out? I mean, I haven't today. Today's a bloodbath. Jeez. But you know what, though? I've been doing this for a really long time. I've always had a really, really strong stomach for investing. I've never missed a blink of sleep from investing, ever. And so with days like today, it's like, this is the bad side of growth investing, right? But it doesn't mean that innovation's not happening whenever markets are down. It's like, even in the 2001 financial crisis, there was an internet bubble that was really sort of, people were saying, oh, well, internet's a fad. This is not the place to be investing, but it still ended up being the most truthful place to invest over the next 20 years, was betting on the internet. But it had a period where you could get things for cheap. And a lot of those players in the area didn't even make it out. Maybe they were too early, right? Some medical delivery places and certain e-commerce stores didn't make it out alive. And some did. And so, yeah. Political risks are important with non-US based companies right now. Nu is publicly traded in USA for a reason. Emerging markets are first to go in negative macro environments. Yeah, so it's not even just that you have to worry about Brazil, but it's like as they expand, you're going to have to worry about each individual country and their issues in current markets, right? What happens in Colombia with a new government? What happens with Argentina, for example? We were supposed to be in there by 2019. We pulled out. We dropped our need to even frickin' want to go there because it wouldn't have been favorable for us, for NuBank. Sorry, I placed myself in the position of these stocks. Today is a good day to buy SoFi and Palantir. I mean, yeah, buying on really negative days is a very good time if you believe in the thesis, for sure. Palantir, what's Palantir's price right now? Did I buy Palantir? No. $14.90, going up to $15.27. Aftermarket up 2.5%. I think that was on Bloomberg News or whatever, that the NHS is closing in on doing a multi-year long partnership with Palantir. Growth is just too slow, and net dollar retention is too slow for me, and a path to more monetization on their AI product is not quite yet to be seen. I don't know. It's just and it's not that that's a bad investment. It's just one that I can't see, and if I can't see it, then it's not for me. Then maybe I'd have a hard time sleeping at night, and I sell those pretty quick. What do you think of Enphase? I hold Enphase. Purchased it pretty recently, I dollar cost averaged down pretty recently. held it even higher than this. But yeah, no, I'm a fan of the company. Angela, join late. What is the other stadium? It's called SoFi Center. I talked about it right at the beginning of the call 50 minutes ago. 50 minutes ago. Jeez, these calls have been going so long. I was actually just talking to my girlfriend. I was like, I'm going to need to tighten them up, do like 15 to 20 minute calls, make them more condensed because I think people like that. Sam, I'll answer that in a second, then I'll go. But yeah, then I just get talking, and the questions are really good today, and people are really active, so I stay. It's funny, people flood the chat whenever things are doing really, really well, and whenever things are doing really terrible. But whenever things are stagnant, no one's here. Gotta love it on the good and the bad days, but just the average days when SoFi does 0%, no one's in the chat. Sam, okay. Tanner, last question. How much cash percent do you have? Like near zero. Like very close to near zero. I invest, what do you call it? Net new funds. So whenever I get paid, I invest, or I'll switch around some positions from time to time whenever I, lose or lower conviction in a certain stock. Usually I don't trim them. Usually I exit fully. If, for example, something has completely just changed my my investment thesis, but yeah, can see under 40 for Block. Okay, so Block we'll be talking about tomorrow, but yeah, that's essentially it for today, guys. It's been 51 minutes plus. These crazy long episodes are nuts. Hopefully you guys are doing well, and yeah, we'll have to see what happens at SoFi Center. Thank you all so much for watching. Bye for now.